It is my pleasure to introduce the PCAOB Chairman, Jim Lagatadis, Mark Calabria, Board Member Steve Lawton, and you all know Board Member George Boddick. I also would like to welcome our newest members, Jason Nagler, David Edelson, Jennifer Sisson, Alicia Damley, although you're a returning member, Diana Glassman, and thank you to all of you who are continuing your service on the IAG. I've spoken to several of you already and look forward to working with you. Before we proceed, I'd like to take care of the few logistics. First, I'll offer the usual disclaimer for that comments today are our own and they do not represent views of the board members and my fellow staffers. I'd also like to add that if you'd like to ask a question or make a comment, please place your attend card. We have a full agenda, including inspections and inspections reporting, a request by the IAG for public submissions of critical audit matters or key audit matters for its review, artificial intelligence and strategic planning. And finally, I would like to thank my fellow co-chair of the IAG, Amy McGarity, for continuing her service on the IAG. With that, I will turn it over to Amy. Thank you, Amy.
Thank you, Saba. I would just like to introduce Chair Logothidis again. Really appreciate the time that you took yesterday to meet with us separately. And for joining us this morning. Really grateful for that engagement. Jim was appointed chairman of the PCAOB by the SEC in January of 2026. He brings more than 4 decades of experience in auditing, financial reporting, and governance, including a very distinguished 40-year career at Ernst & Young, where he held leadership roles such as vice chair of global accounts and managing partner of the Midwest U.S. Assurance and Advisory Practices. He has also served on the board of the Republic Bank of Chicago, chairing the audit committee and on the advisory council of Cross Country Consulting, as well as a senior advisor at HUD's Office of the Assistant Secretary and Chief Financial Officer, where he led the audit coordination committee for Ginnie Mae. We are very grateful for his engagement with the investor community and with the broader stakeholder ecosystem that supports high-quality public company financial reporting. Saba, I'll turn it back to you.
Thank you, Amy. And with that, I will give the floor to Chairman Lagatadis.
Thank you. All right. Got it. Good morning and welcome, and thank you all for being here. I want to thank Saba and your team within the Office of the Investor Advocate for all your work organizing today's meeting, as well as Amy for your services as co-chair of the Investor Advisory Group, and of course to all the IAG members for being here today. I'm looking forward to getting to know you all and working towards our shared goals of strengthening audit quality and protecting investors. Before I proceed, please note that my remarks this morning reflect my individual views as the PCAOB's chairman and do not necessarily reflect the views of the full board, my fellow board members, or the PCAOB's dedicated staff. I joined the PCAOB because I believe deeply in the mission of protecting investors by strengthening the integrity of our capital markets. But I believe that mission is only as strong as the dialogue we maintain with those who rely on audited financial statements. The IAG has consistently served as a key forum for meaningful discussions about trends, risks, and the need to proactively consider future challenges. That belief in transparent stakeholder outreach is why my first major initiative as chairman was to kick off the PCAOB's strategic planning process with an open comment period for the PCAOB strategic priorities. This marks the first time the board has done something like this. The comment period is open through Friday, May 15th, and we want to hear from you. The questions we pose are only intended to begin the dialogue, not define its limits. Please share your broader feedback and insights as we begin this critical process. The PCAOB's next chapter must be built on the perspectives of the people who know this ecosystem best: investors, auditors, audit committee members, academics, and more. That is why strengthening stakeholder outreach is a top priority for me. As members of the IAG, the insights you share here today help us see emerging risks more clearly, understand where our work meets real-world challenges, and ensure our oversight reflects what is actually happening in practice. As we convene today, I would like to acknowledge feedback received from our advisory group members who have felt that their recommendations have not always been considered or incorporated into the PCAOB's activities. This is something I'm committed to fixing for all of our advisory groups. Beginning with today's meeting, the PCAOB will adopt a more transparent and structured approach to considering your feedback. At the end of today's session, we will recap the recommendations received from you, and in future meetings, we will update you on how your input has informed our thinking, our actions, and priorities. Your perspectives are essential to our mission. It is a new day for the PCAOB, and we aim to ensure your contributions are thoughtfully considered as we move forward. So I encourage you to speak candidly about what you are seeing, what concerns you, and where you believe the PCAOB can have the greatest impact. While we may not always agree on every point, we will always share a common purpose: maintaining trust in our capital markets and ensuring investors have the reliable information they need to participate in the markets. Thank you again for your commitment and partnership. I look forward to a productive discussion today. And now I turn over the floor to my fellow board members for their comments. Let me start with board member George Bodek. George, the floor is yours.
Good morning, and thank you, Chairman Logothetis. I also want to thank the Investor Advisory Group co-chairs, Sabu Kumar, our PCAOB investor advocate, and Amy McGarity, for your leadership. We would not be here today without your commitment and efforts and dedication to the IAG and engagement with investors. I also want to welcome all the IAG members, and in particular, the new members joining us today for the first time. I welcome your contributions and engagement. Your voice is critically important to inform the board and the staff. Like the accounting profession, the PCAOB is in a period of self-assessment, and 3 of today's sessions bear directly on the charting of our future course: inspections and inspection reporting, artificial intelligence, and the PCAOB's strategic priorities. I'm very much looking forward to the discussions surrounding these topics and hearing views and perspectives from those around this table. The IAG's input has long been of immense value to the PCAOB. Our discussions here are not about abstract issues, but address current topics of practical import. You bring to the table years of working to understand and advance the interest of users of audited financial statements, and I'm confident that your insights will help us chart a course on those topics. As we chart that course forward, your input can help keep us grounded in the PCAOB's core mission, which, simply put, is to do what is within our power to cause financial statement audits to be performed in a way that merits investor and public trust. The PCAOB's mission to protect the interests of investors and further the public interest in the preparation of informative, accurate, and independent audit reports reflects a powerful truth. Investor confidence is the engine of our capital markets. When investors can trust financial statement audits, capital flows more efficiently. When that trust diminishes or even erodes, markets become more costly and volatile. Audit quality matters because it promotes that trust. And in the wake of a string of failures that revealed investors to be at a greater risk from a self-regulated accounting profession than many people realized, Congress created the PCAOB to address that problem and help restore the necessary trust. The dialogue today will surround topics that directly impact our programs and activities. In particular, I look forward to hearing IAG members' perspectives on our inspections program, which is the heart of our mission. I'm interested in your views on what, if any, changes to our inspection program we should consider or should avoid, and why. I'm also keenly focused on the impact of AI throughout the financial reporting ecosystem, and I'm interested in hearing the perspectives of the three panelists in the session moderated by Gina Sanchez. As we read nearly every day, the impact of AI is likely to be significant and disruptive for both the preparers of financial statements and their auditors. One area of specific interest is how auditors use of AI may affect investor confidence in the audit and whether there are types of disclosures about that use that would be of value. Before concluding, I want to applaud the IAG and specifically Jeff Mahoney for his leadership for continuing to focus on critical audit matters, or CAMs. This will be the IAG's third year to request that the public submit CAMs, CCAMs, or key audit matters, KCAMs, contained in public company audit reports included in Form 10-K and Form 20-F filings. The process the IAG goes through to review the submissions and select the most decision-useful CCAMs or KCAMs represents a significant and valuable contribution that benefits stakeholders across the financial reporting ecosystem. In conclusion, thank you for your commitment and willingness to engage with the PCAOB. I look forward to your comments, insights, and questions throughout all of today's sessions. Thank you, and back to you, Mr. Chairman.
Thank you, George. Now let me turn it over to Board Member Steve Lawton for his comments.
Thank you, Mr. Chairman. I want to first welcome and thank the new members of the IAG, many of whom I had the pleasure of meeting yesterday. Second, I want to thank the continuing members with a special thanks to Amy McGarity, who has tirelessly served as the IAG co-chair over the past 4 years. Third, this important meeting prompted me to refamiliarize myself with the IAG's objective as reflected in its 2022 charter. The IAG's objective is to provide the board with the views of investors and their advocates on the PCAOB's regulatory agenda and includes serving as a source of information, views, and recommendations on other matters regarding the PCAOB's oversight activities. With regard to our regulatory agenda, our chairman recently announced that we will be soliciting public comment on certain provisions of QC 1000. And on March 31st, PCAOB requested comment regarding the PCAOB's strategic priorities. I look forward to hearing the views of the IAG members today and receiving the IAG's consensus views on the PCAOB's strategic priorities before the close of the comment period on May 15th, 2026. Thank you and welcome.
Thank you, Steve. And now Board Member Mark Calabria.
Thank you, Jim. I guess since I'm relatively new to the board, it's kind of like you're all new board members to me. At least it's, we look forward to getting to know all of you. I'm somewhat reminded of the quip about everything having been said, but not everybody having said it. But I'm going to refrain, but I do want to associate myself with what Jim, George, and Steve said. I agree with all of it. In my 3 months here, I've been extremely impressed with the camaraderie and shared sense of purpose among the board. So I'm really very excited the degree that we've worked together, especially on issues on transparency and making sure that we hear from a wide variety of stakeholders, including yourself. So in order to get to us hearing from those wide variety of stakeholders, let me just thank you again and thank Saba and the staff so we can actually get to the meat of the conversation. Thanks.
Saba, go ahead.
Thank you, Chairman, and thank you to all the board members. Next on the agenda, we'll discuss inspections and inspections reporting. As IAG members may recall, we last heard from my colleagues in the Division of Registration and Inspections when they presented on non-US inspections. Today, we're here to help facilitate a discussion about how inspections and inspections reporting may be improved. As you're aware, the PCAOB recently requested comments on these and other aspects of our strategic plan by May 15th. So please do submit comments and ask your other investor friends to submit comments. Members will have an opportunity on other aspects later today. Please have your feedback on those other aspects until then. As the discussion unfolds, we would encourage you to hold a few questions in mind. What information do you genuinely rely on? the inspections report as you review it, and what do you skip over? And if you could change one thing about how we present this information, what would it be? There are no right or wrong answers, just candid feedback, including critical feedback, is exactly what moves the needle. With that, I will turn it over to Christine Gunia, the Division Director for DRI. Christine, please take it
Yes.
away.
Thank you, Saba, and good morning, everyone. The Division of Registration and Inspections is pleased to join today's meeting to discuss our important inspections work and a particular focus on inspection reporting. We'll talk a lot about inspection reports, but our reporting goes way beyond the individual reports that we do issue. I'm joined this morning by my DRI colleagues. To my left, Matt Ulan, a senior inspector, and to Matt's left, Annie Torres, an associate director. Both have extensive experience, not only performing inspection activities, but also in the area of inspection reporting. Before I go any further, I should repeat the standard disclaimer, and that is the views that Annie, Matt, or I express are those of our own. They're not necessarily the views of the PCAOB board, individual board members, or members of the PCAOB staff. So we plan to cover a number of topics related to our inspections, but we do want to spend the bulk of the time for the next hour and change focusing on the different types of inspection reports and the components within the individual reports, as well as other inspection reporting activities. We very much look forward to your comments and your feedback throughout, so please don't hesitate to raise your 10 cards and share your thoughts. Before I turn it over to Annie and then Matt to get into a little bit of the details about our processes and our inspection reporting, what I thought I would do on, I believe it's the next slide, if you would, is just give you a little bit of a background about the scope. So you have a general sense as to the nature and, or importantly, the volume of inspection work or inspection reporting we undertake every year. So as a reminder, the PCAOB inspects registered public accounting firms. And the goal and objective is to assess compliance with the relevant professional standards. These include auditing standards at the engagement performance level, but also quality control standards that are applicable at the firm level, so to speak. And the frequency of these inspections is mandated by Sarbanes-Oxley. So specifically, for registered firms that audit more than 100 issuers, the PCAOB must inspect those firms annually. For firms that audit 100 or fewer issuers, the inspection regime, as mandated by Sarbanes-Oxley, is at least every 3 years. And there are occasions where we will perform those inspections more frequently than 3 years. We also conduct inspections of firms auditing broker-dealers that are registered with the SEC, and we'll talk about that a little bit more in our remarks. But generally speaking, we inspect roughly 200 firms each year. Each firm that is inspected auditing issuers is required by Sarbanes-Oxley to receive an individual firm inspection report. So we have just north of about 150 of those on an annual basis. And those reports are issued on a rolling basis. So the number of firms I mentioned there is how many we're inspecting, but each does receive its own individual firm inspection report. And then the activities related to our inspections of firms auditing brokers and dealers, those results are aggregated into one report that is issued on an annual basis. So that's a little bit different from the firms auditing issuers, but we'll talk about some of those differences again later in my remarks. But with that as a backdrop in terms of the kind of the scope and the breadth of our responsibilities, let me now turn it over to Annie. She'll give you a quick, maybe high-level overview of our inspection processes, because there are many that lead up to the actual issuance of reports and reporting on our results, more broadly speaking. Annie?
Thank you, Christine. Maybe next slide, 2 slides.
keep going for it.
Yeah, one more.
Yep, one more after
One
that.
more after that. Thank you. So, first of all, thank you for having me. This slide here is a very busy slide, and I do not intend to cover each and every point on it. But the main points are that our inspection process includes basically three phases, right? A planning phase, an execution phase, and a reporting phase. And throughout these three phases, as you can see, we're interacting with the firms, and we're, engaging throughout. Our discussion today will really be focused on the end on the right-hand side of this slide, these red circles, which really talk to how we communicate the results of all of those procedures that we undertake as part of our inspection. Christine mentioned, right, that we look at approximately 200. I mean, we do this for each and every firm, and we scale it based on, right, the size of those firms and the issuers that they have. So again, our focus today will be on the right-hand side of this, which is really the inspection report that you see that's available publicly. So with that, maybe next slide. So if we talk a little bit about the reports are provided to the firms in draft. The firms have 30 days in which to review those draft reports, and they have an opportunity to respond to those reports. One of the key aspects of to meeting your needs as investors is to ensure that we understand your perspectives on what you believe might be timely and relevant information that we publicly reveal in the reports. So we continually evaluate this process. I mean, over the years, if you've been following our reports, they've evolved. And so we're always looking to make these reports more meaningful and transparent for the users. And obviously, as investors, you're a very important part of that process. So today, that's our goal. We also have information on our website that you can go into and filter through that information. You can run comparative reports across the firms, right? So we're looking to not just give you individual firm reports, but also provide you avenues to compare and contrast and, find what's meaningful to you. So again, today we're interested in your views in how we can do that better. How can we best provide inspection results, inspection findings that will be relevant and meaningful to you? So we encourage, a good discussion here. So maybe next slide. One thing that I'd like to highlight is during that 30-day period where the firm has received the draft report, they do have an opportunity to seek review by the SEC. And if the firm does that, we typically need to wait until the SEC has completed their review before, we make any of that information public that the firm has, sought the review on. And one other point, when we first publish the reports publicly, we do not include, and this is something that's in the Sarbanes-Oxley Act, the QC criticisms that we have in Part 2. So it is solely the Part 1 part of the report, which is what is originally released publicly. So with that, I will turn it over to Matt, and Matt's going to walk us through some of the specific components of the report. And then, hopefully we'll engage in some good discussion.
So just a quick reminder, there's, Sandy has a question, Sandy Rich.
Okay.
I'll wait. Let's wait till the.
Okay, thanks everyone. Appreciate the opportunity to be here today and to hear from all of you on this advisory group on your perspectives on the report. These are very important for us to consider as we evaluate whether our reports are meeting the needs of stakeholders across the investor community as well as others. So if we go to the next slide, please. Just wanted to give an overview of the inspection report and the format and presentation of the information in the inspection report. First, we have two report formats. One is for the annually inspected firms. One is for triennially inspected firms. And those are the firms that we are required to inspect once every 3 years. These formats are used for firms inspected across our GNF and NAF inspection programs and include both U.S. and non-U.S. firm inspections. So to start, each report on the annually inspected firms includes an executive summary section that offers a high-level overview of the deficiencies identified in our inspection, which provides investors, audit committee members, and other readers with an easy-to-read summary of what's included in the report. And I'd also like to mention that we separately identify in this section any audits we reviewed where a restatement to the financial statements or revision to the firm's ICFR opinion occurred as a direct result of our inspection procedures. Reports on the triennially inspected firms have a more condensed overview and historical data by inspection year section than reports on annually inspected firms, but otherwise the content is similar to the reports on annually inspected firms. Next, the report presents an overview of the inspection and historical data by inspection year. This includes introductory information on the scope of our inspection for a particular year, such as how many of the firm's issuer audits we selected to review and the fiscal year and date for the majority of those audits. It also outlines the sections that are included in the report. For the annually inspected firms, we present the data for the current and the previous 2 years. For triennially inspected firms, we present the data from the current and the previous inspection, unless that inspection happened more than 3 years ago, in which case the prior inspection data is omitted. Lastly, I'd like to point out that the annually inspected firms can include a series of charts that present over a 3-year period the most frequently identified Part 1A deficiencies by type, the audit areas most frequently reviewed, the audit areas with frequent Part 1A deficiencies, and the auditing standards associated with each Part 1A deficiency. The report also presents inspection results over a 3-year period by issuer industry sector, issuer revenue range, the firm's audit tenure on the issuer, and the engagement partner's tenure on the issuer. And we would certainly appreciate your feedback on whether you find this information or presentation useful, any other information we can consider, and also whether we could make further improvements to the information we present in the report. So next slide, please, this is just an overview, an example of a Part 1A deficiency in an inspection report. And as a reminder, Part 1A is the section that contains audits with unsupported opinions. And these are deficiencies that were of such significance that we believe the firm, at the time it issued its audit report, had not obtained sufficient appropriate audit evidence to support its opinions on the issuer's financial statements and or ICFR. On this slide, we have included an example of a deficiency in Part 1A of the report. And just a couple of other things to highlight. The inspection report does currently classify each issuer audit into one of 3 categories based on the severity of the deficiency identified. The first category, or the most severe category, is an audit with an incorrect opinion on the financial statements or ICFR. And these are audits where one or more of the identified deficiencies resulted in a restatement of the issuer's financial statements or revision to the firm's ICFR opinion. Then our next category is audits with multiple deficiencies. And the final category is an audit with a single deficiency, an example of which you'll see on the screen or on your slide deck. And lastly, I'd just like to point out that beginning in 2022 inspection reports, we added commentary in Part 1A for certain situations, such as whether the audit was the firm's initial audit of the issuer or whether the firm had identified significant risks, including fraud risks, for areas in which the PCAOB staff identified deficiencies. The next slide, please. This slide, it gives an overview of Part 1B, which Part 1B relates to other instances of noncompliance with PCAOB standards or rules other than those where the firm had not obtained sufficient appropriate audit evidence to support its opinions. Examples of deficiencies we might describe in Part 1B include deficiencies in areas such as the auditor's communications with audit committees, determination and communication of critical audit matters in the auditor's report, timely and accurate reporting of other participants in the audit on Form AP, and assembling for retention a complete and final set of audit documentation. And beginning in 2022 firm inspection reports, we added to Part 1B deficiencies associated with fraud procedures under AS 2401, consideration of fraud in a financial statement audit, and identification and assessment of risks of material misstatement under AS 2110, identifying and assessing risks of material misstatement. The next slide is Part 1C, and this section was also added beginning in 2022 firm inspection reports. This section includes instances of potential or apparent non-compliance with SEC independence rules, as well as instances of non-compliance with PCAOB rules related to independence. And it includes both deficiencies that we've identified through our inspection procedures and deficiencies that the firm reports to us that it identified through its monitoring or other programs to identify independence matters. The next slide, this covers Part 2. Part 2 relates to observations on quality control. And as Annie mentioned, when PCAOB reports are first issued, the public will not see Part 2 of the report under Section 104G2 of the Sarbanes-Oxley Act. Criticisms of and potential defects in a firm's system of quality control in Part 2 are not made public unless the firm fails to address them to the board's satisfaction within 12 months of the report date. In that case, the board may make these portions public. In the next slide, just on Part 2, we wanted to share with you an example, and this is an example of a published or publicized Part 2 unremediated deficiency from an inspection report, as well as what happens when the firm successfully remediates the deficiency, which is the Part 2 criticism is not made public. So with this example here on testing revenue, you'll see what a quality control criticism that has been exposed to the public would look like. And regarding remediation, just in practice, firms often have more than 1 year to remediate a quality control deficiency because the firm is often aware of the quality control deficiency through our inspection process prior to receiving the final inspection report. And we encourage firms to begin remediation as soon as they become aware of the deficiency when the quality control deficiency is communicated through a comment form by the inspection team or through the firm's receipt of the draft inspection. And with that, I'll turn it back over to Annie to cover some other matters on Part 2 as well as the reports.
Sandy, did you just want to pause and see if you wanted to ask your question now?
With more of a statement. So.
Oh, up to you.
Wait.
Okay,
Yeah.
we can.
He's first in line.
Okay. Absolutely.
So, I mean, first of all, I think the inspection team does a phenomenal job in contributing to improving audit quality, and I really appreciate the work that you all do. Just to give
Namath, if you could please bring the mic.
to give insight, it would help to understand how does the inspection team select focus areas, and recognizing that you cannot inspect every single issuer engagement. How do you all select issuer engagements to ensure that audit quality is protected throughout the capital markets?
Thank you, Nemit, for that question. I'll share a couple of ways, and I'll start with the inspection report itself. We have disclosure in the inspection report about, I'll say, methods of selection, which files, and Matt will keep me honest, which files are selected randomly. In some cases, generally it's the larger inspections, and also our broker-dealer program, we do select some files randomly, and others are risk-based. I'd say predominantly the files are risk-based. We work internally with, say, historical inspection information. We work with our colleagues in the Office of Economic and Risk Analysis on what risks they're tracking, because to your point, we only select a sample of files. So we try to go for the largest, maybe the more significant risky files, and then with some population of random. But then within each file, we're also only looking at portions of the audit. Generally, they're the more significant risk areas, generally, and oftentimes they tie in or relate to the reason why the file itself, the audit engagement itself, was risky. Maybe there was a major transaction, so we'll look at the financial statement accounts related to the transaction. So a lot risk driven with some element of randomness. We also, so there's some disclosure of that in the inspection reports. We also, outside of the reports, publish documents that maybe shed light on our priorities, right? What might our upcoming areas of focus be? We have spotlight documents in that regard. We'll talk about, you know, the upcoming season, just hypothetically, being crypto, the use of artificial intelligence, so things like that. So we have publications outside of the inspection report that try to give a flavor for what risks we are monitoring and then trying to address in our inspection reporting.
Follow up. How do you pick the focus areas? Yeah, go ahead.
Yeah, no, those also are somewhat very much risk driven. So it could be in part, like I said, the risks related to the audit file, i.e. because there was a major transaction, and then those areas will follow. Some are industry driven. We know certain financial statement accounts, say in the banking or financial services industry, are more risky than others. Revenue, given it's a presumed risk of fraud, is commonly an area of inspection focus. And then it will vary depending on the business, the issuer, public and non-public information available to us.
Christine, if Sandy could make his statement, and then I have Ken, Jeff, David, and Gina.
Just to follow up first to Nemit's question, I'm wondering if your risk-based analysis suggests that the regime of selection, the 1 year versus 3 year, you know, where are the risks appearing in the large institution, the large auditors, or the small auditors? Does your risk-based analysis suggest that perhaps the regime is upside down?
Well, I'll answer it a couple ways. And Sandy, you tell me if this is what you're driving at. So the risk may increase the frequency in which we inspect a firm. So some of the higher risk otherwise triennially inspected firms could be inspected more frequently. On some of those triennially inspected firms, because they're 100 or fewer, sometimes they only have a small number of files to select. So, and even outside the US, sometimes they're the only ones we could select. Like, so it depends. So I don't want to suggest it's all entirely risk because of sometimes the sample that we can choose from. But risk starts with the firm, I guess. Granted, there are mandates. And then once you get into the firm, risk will drive the files that we select and then the corresponding focus areas. We do appreciate that, at least on the annual firms, there are different files selected every year. There could be some overlap depending on, you know, a variety of factors. But generally the areas, i.e. revenue or, you know, inventory, or in the case of banks, and we do disclose the industries where these files are, that you can try to see where the continuity or the consistency is year over year. But it is a mix, and I probably gone beyond maybe what your question was, but let me just pause and see if that was.
Yes, I'm assuming that like any industry, the larger, more established, more capable firms are less risky than the smaller, less capable firms, just as a general assumption. And that's what I'm probing.
Yeah. Yes. But the risk also lies in the audits that they are taking on, so to speak. So if they enter into a new industry, maybe there's a rise in SPAC companies, right? That may change the risk profile of the firm, notwithstanding that it's a larger, maybe more sophisticated firm. So it depends.
So I would just like to comment that my experience with the inspection report is that the PCAOB does an extraordinarily good job. It has met my needs as an audit committee chair, and has actually saved one of my public companies significant expense and complication just as a result of reading inspection reports. I would commend anyone, investor or audit committee chair, to subscribe to the emails on the posted reports and review them if you have exposure to any of these companies, to understand what these audit firms are doing right and maybe what they're doing wrong. I mean, I will personally respond on May 15th with my comments on what I think are some immaterial and maybe overly complex issues within what you do, but I congratulate the PCAOB on its ability in saving one of my company's significant resources. One of the fascinating things is that not enough people read these. I mean, in the instance where my company was benefited, 30 companies lost the ability to do financing for 15 to 18 months because their filing statements were invalidated because their auditor the door was slammed by the SEC. And one of the things I would comment on is the time lag between PCAOB's discovering of a problem, validating the problem, getting feedback from the underlying auditor can take years when the SEC finally acts. I would ask that there be something looked at in terms of how that timeline rolls out, because I suspect Christina and her team will know of problems 24 to 36 months before actually some people can act on it, which is too long. Thank you.
That's helpful, Sandy. Ken?
Yeah, I'm going to follow up some of the comments that Sandy made. I agree with your thrust. I'm actually on, believe it or not, 5 public company audit committees, so I have a full slate. I do read many of these inspection reports. I have a comment on those. I sort of separate them between those relative to the Big Four. I then look at the ones that are the affiliates of the Big Four, which is a whole separate group. I look at sort of the next 6 to 7 firms, and then all others. And it seems to me they are very different. And I think I would find a way for you to classify them. I'll go with the all others. My sense when I read these, many of these firms should not be in existence. You see I can't believe I'm not a CPA, so I want to acknowledge that for the record, so make sure it's clear. But it seems like many of these should not be CPAs. That's where I was going. And I'm just appalled at some of the things I read on some of these smaller firms. And frankly, I just can't imagine before we had PCAOB what existed out there, like sort of the lawlessness of these firms that providing audits. So that's sort of an overall comment. 2, I would say it would be great. You said a summary. I see these inspection reports like you mentioned, because I'll see them come to me. I don't see that summary report. And I would find a way to summarize your key findings so we have lessons learned, because that would be very, very helpful. And I would actually make it a requirement, and I mean this actually seriously, that our audit firms have to provide this to the audit committees on an annual basis. I actually asked for it. They provide it when I ask for it, but I think it ought to be a requirement that they are required to provide it to the audit committee once a year, so we can see you can see, and that they're all now bragging that their defects are going down, which is fine, but it'd be good to see them actually have to provide that to us. The last point I'd make is I sort of try to find what's material, and I think you ought to find a way on the inspection reports, because so much of it I find is a little bit boilerplate. you know, you didn't do the I's and T's versus what is real, what is material, what is a real mistake, you know, and so as opposed to sort of a paperwork issue. So I would try to sort of find a way that, you know, again, we as readers, and as you, Sandy, mentioned, you know, there's a lot of lessons learned here, but to me, lessons learned is not paperwork, but lessons learned, where was a real mistake? What can we really, what we, as audit committee members, or frankly, even the public that read these reports, what can they take away as lessons learned? So those are my comments.
Thank you, Ken. That was very helpful. Jeff, you're next.
Oops. Thank you, Jen. Two quick comments. The first, Professor raised risk-based inspections, and I just want to throw out one idea related to that. Right now in my world, the corporate governance world, there's a lot of debate and discussion going on about reincorporations in other states. So it's mainly discussions around Delaware, Texas, Nevada, and the Cayman Islands. Those are the four that are kind of in the mix. And so when you think about risk-based inspections, there is at least one academic study I'm aware of that suggests that the state of incorporation may have some impact on the aggressiveness of the accounting used and also the frequency of restated earnings. So I just throw out that as an idea that potentially as part of the risk-based assessment, you might want to look more closely at issuers that are based in certain jurisdictions. My second comment is on page 3, there's a reference to non-US inspections. So often when I have trouble sleeping at night, I read things like congressional testimony. So I read one night the February 12th Senate Banking Committee hearing on SEC oversight. It did help me get to sleep that night, by the way. So in that testimony, Senator Jim Banks, and there were several other members of the Banking Committee, they raised concerns about whether American investors should trust the financial reports of Chinese companies listed on the U.S. exchanges. And in responding to that inquiry from Senator Banks, SEC Chair Paul Atkins, he referenced this board, the new board of the PCAOB, and he indicated, quote, it would be one of the main issues they will be focusing on, unquote. So just kind of two comments or questions. I guess one is, will consideration be given as to whether you should prioritize inspections of the audit work papers of PCAOB registered firms in China? That's one. The second question is, if you do that, do you believe you have the resources to do those inspections in a manner that would address the concerns of Senator Banks and others on the Senate Banking Committee? Thank you.
Thank you, Jeff.
Well, I was going to make some comments at the end after hearing all your comments. If you don't mind, can I keep that, Jeff? Can I keep
sure.
it and then
Absolutely.
kind of respond to everybody? Because I know there's other people that want to jump in. What I want to do is kind of synthesize your comments and then respond overall, perhaps. Okay.
Thank you, Jim. David, you're next, and then I have a couple of other names.
Thanks, Sala. Ken, you kind of brought out one of the points I wanted to make, and that was creating a summary to make it more digestible to users. The other point I wanted to ask, and honestly, I don't know, but it does kind of speak to what Jeff mentioned about risk-based. When you look at the audits, or when reviewing, if a company has more than 100 issuers, do you look at the amount of market capital those issuers have in the market and the riskiness of that capital to kind of gauge which ones you really want to focus on?
Market cap is an input into our considerations.
But
It's
not
one-
market capital. Like what's the value of the securities and what's the duration of the securities? What's the risk of the securities that they have issued in the market that their audit is now covering?
it is an input. It's an input,
Okay.
but there are many inputs into our consideration.
Yeah, because I think just like the 100 number just seems to be, it's easy to draw that line, but I don't know if it really captures the risk.
Yeah, and that's the mandate as, you know, Sarbanes-Oxley was originally interpreted.
Thank you, David. Gina? And then oh, okay. Gary?
Yeah, first of all, I didn't really like Texas being thrown together with Cayman Islands, but we'll let that slide. You know, I I guess before we jump on the bandwagon of having the big firms doing a great job and the little firms being deficient, the overall deficiency rates are still incredibly high. And looking at one of the big firms' results, and there's a 20% deficiency. As a user of financial statements, how should we look at that? And what would be a good target for us to shoot for in terms of where we should be? And I think that speaks to it would be great to have more detail about significant deficiencies or deficiencies that were important versus those that aren't.
Thank you, Gary. That's helpful feedback, and we'll take it under advisement. Next is Stephen Gray, then Jen Sisson, Sandy Peters, Satyam, and Namat again, and Gina.
I guess as a fellow Texan, I have to agree with Gary's initial observation. And as much as Delaware to Cayman certainly sounds like a race to the bottom to me, I think there's low-hanging fruit for the organization that could have real value. It's an opportunity for the PCAOB to demonstrate in a very real way the value they bring to the user community like us. We're actually have to put capital to work or managing risk and relying on the authenticity and the accuracy of the financial statements. And that is, I'm going to make a very specific suggestion or ask is, I think it would be very helpful and great advertising for the organization if you could go to the website and if you were looking at a company, put the name of that company in and bring up its entire audit history. First, you see a list of all the firms that have audited. Each one you can click through and see the publicly available information for those audits. You could also click through and see the audit history of that auditor. I think that makes sense if you're an investor and in that sense also a fiduciary. That would be my first stop.
I'm just not sure I understood. Just to clarify, because I think it's a good point, but I want to make sure I understood. So are you saying that you want it by firm or by issuer? Because there's no information about the inspection by issuer, and by issuer I mean public company available. So that's what I'm trying to understand. Are you
all of it? All of it.
So
I mean,
you want
if you could
results by issuer.
By issuer, by corporate entity, any way that you could cross-list it or make the information accessible. Okay. If the information exists, why not make it more readily available and comprehensible to the investment community? I think in very literal terms, that would be my first stop.
Been saying it for 4 years.
Well, I'm sorry they let me speak before you. Go ahead.
Hook 'em horns.
Okay.
Sandy, you can go next. Thank you, Steve.
Oh, was Jen before me? You know, I guess I agree with all the comments that have been made. I think that I think I have more to say in the response on the 15th than maybe today because I need a moment to collect my thoughts. But you know, as I look at this, to me, and we talked about this when we talked about international inspections before, is there's a vast amount of information that over the past 20 years to contextualize the inspection process that doesn't necessarily exist, right? So there's a lot of talk about small firms. There's nothing that really shows. You can get it from the audit quality, I forget the name of the organization, Audit Analytics, it's got a different name now. You can sort of sort those by market cap, but to decide what are the most important entities. But there's a vast amount of information that's sort of needed to contextualize the importance of the inspection process. Not the report, but the process. I think that going through what we went through last summer, how many reports are done, what they actually cost, what the percentage of the budget is. The organization doesn't have the facts to support its existence. And the public narrative about PCAOB board members' salaries rules the day, which is ridiculous, right? And the PCAOB has done a great job internationally of improving audit quality. So I think there's a lot of contextual information that's needed, and I can provide some of that. On the report, you know, I've got some, you know, some of the charts are hard to follow because it's like we have all the numbers, but not the percentages. I think that the entirety of the inspection process is wrapped around a single number, which may or may not be statistically relevant. And that's a shame, right? Because there's not enough texture or contextualization around it. So I think there's something that sort of needs to be done around that. My biggest concern right now with respect to the report is there's a global narrative of moving to inspecting at the firm level as opposed to inspecting at the engagement level. You just heard Steve say that he wants to know, because he's investing at the company level, right? Investing that's where investors own, that's what they care most about. We care about the firm, but we don't want to have to sue the firm, right? So there's a lot of information that, you know, there's a lot of good that comes from inspecting at the engagement level, not only deterrence, but understanding the relevant risks. But also, part two, if you move to an audit at the firm level, Sarbanes actually prevents you from disclosing what you found. So you're going to actually make the inspection report less meaningful. And inspecting at the firm level, to my mind, is more of a TOD, a test of design for you non-CPAs, and then a TOE, which is test of effectiveness, right? So to me, I'm thinking about big picture and the contextualization and this desire to move inspections, and you know also the conversation about moving from QC 1000 to making it more like ISQM1. I think some people may have saw my post about, like, I just asked ChatGPT to compare them, and there's a really funny analogy at the bottom about what really the difference is. But to me, that's a big concern for investors. When you hear comments like Steve said, wanting to know specifically at the issuer versus moving inspections to the firm level. So, and also one more thing, the PCAOB has such a vast amount of information and a unique position because they're really, the FRC is the closest, but they're so unique in that they make the standards, because the FRC doesn't make them, they input them. They make the standards and they inspect and see how they turned out. I don't ever hear much about what they found in the process to feed back into improving the audit standards. So I think there's an important feedback loop in doing that. So sorry, my comment was kind of long.
Perhaps this is the right time maybe for me to jump in, because what you're talking about, Sandra, and everyone, but you're talking about now is at the heart of what we want to do, and we obviously have announced. There's no question, as George said, that when you look at this organization, at the heart of the organization is inspections.
Yeah.
Yes, we do other things as well. All you have to do is look at the number of people that we have in inspections versus the overall personnel, obviously related also to the budget.
They don't know that in Congress, though.
Well, exactly. And we have, and that's another topic, and we're working on it. There's so many things that the public does not know. And quite honestly, we don't even know ourselves. And it goes back to, Sandra, what you said, and this is the way, I'm just going to tell you my personal view coming into this. I didn't expect to come into this. I came into this. I'm fully committed to it. I know I can make a difference. But what I'm asking my team, what I talk to my team about all the time, everyone involved in the organization, is why do we exist? Because we came in and we have to be realistic that there was discussion, as you all know, about doing away with this organization. So when I interviewed with the SEC, I of course asked them, is this thing, are you serious about keeping this around? And of course the answer was yes. We want to keep it. It's going to be here forever. And you need to do whatever we need to do to regain the credibility that perhaps is missing out there. Okay? And that's my focus. That's all I think about 24/7. So it gets us back to a number of things, but let me just focus on inspections. I was with the firm, with EY, for 40 years, from junior all the way up to senior partner. Okay, and I handled some of the largest clients of the firms. My last client was the Coca-Cola company that involved audits in 150 countries. I spent half of my time traveling the world. When I think about what we do and what we do with training and the direction we're taking with QC 1000, which we have announced is a priority, we're going to make some modifications going through the proper process, but we're looking to make some modifications, but continue the effective date as is. We're not delaying that. So when I look at the inspection process, the closest I can come to based on my experience, and I can say honestly that deep down, everything that I did with the firm for 40 years, yes, I had titles, yes, I did other things, but I was focused, I was an auditor. I was the lead audit partner on engagements. And I know the audit process really well, and I love doing the audit process, and I see the inspection process here as one giant audit. So let me talk about the direction. The closest that I can come to from an analogy that most unsophisticated people, not this group obviously, but most unsophisticated people out there don't understand, is the analogy of the Federal Aviation Administration and airplanes. What we're here to do, the accounting firms obviously, and us, in our job as regulator, we want to prevent airplane crashes. We want to prevent significant audit failures, any audit failures, but especially significant audit failures. Now, when we go back to history, even the primary reason why this organization was formed and why we're here today is Enron and WorldCom and a few others that followed. So when you do the root cause analysis of what happened with Andersen, Andersen was an incredible firm. I was in the Chicago office. I grew up there. They were my other choice. It was EY or Andersen, and I picked EY. I competed against them. I knew many of their partners. They were terrific people. And one could argue that what the government did was unjust, inappropriate. Many people would say that, especially with hindsight. Well, when we look at what happened there, here's what we know. They had very well-trained people. They knew the industries well. They were growing rapidly, all the good stuff. We know, of course, about Accenture and the other side, the consulting side. But the main failure with Andersen was the fact that their quality control processes did not work. More specifically, they allowed each signing partner to make the final decision on the accounting. They were able to get permission, or not permission, but input from technicians, what we normally call in most accounting firms, professional practice. These people that are there just to make sure that you're applying accounting properly. And in that particular case, the technicians told the partner on the account exactly what the accounting should be, and he ignored them. That's the primary reason they failed. It was the quality control system. Now let's talk about an analogy in the FAA. When we get on airplanes, we all assume that the pilot has been well-trained, or pilots. The company has done the right process to find the right pilots and train them, and that the airplane is maintained properly, right? There's a maintenance system that works, right? So we take those things for granted. Now, let's think about that. Most airplanes that fail, that crash because of a defect, some mechanical defect, that maintenance either didn't properly review or pick up on, or they did pick up on it, didn't do the right thing. Okay, the bolts that were missing from the 9/11 in Chicago so many years ago, right? Things like that. So when you think about what the airlines do and what the FAA does. The FAA does not go out there and select 30 airplanes or 55 airplanes from the fleet of 1,000 American airline flights to check specific flights, to give you a report as you enter the door, to say this airplane has been, I've inspected it, is properly, it's got all the right things for you to fly. They do it at the entity level. They check the records, the maintenance records, their internal process, right? In the accounting firms, because they have a motive to make sure they exist. If they don't have the right quality, they will be out of business. And it will be out of business soon, or there will be a lot of lawsuits and things like that. So they have a natural incentive to do the right thing. Obviously, having the PCAOB and the potential inspection by the PCAOB or the regulators overseas, that's an incentive as well, right? So they do their own extensive quality control processes, not only on a random basis, on an industry basis, on a risk basis, but also they themselves assess the risk of them getting inspected by the PCAOB. I was there, I know. And they do it based on the risks that they have identified. And therefore, when they get a list of the priorities, the riskier clients that potentially could be inspected, they send an army of people out there to review their work papers. And so they do all of this. And then we come along and we randomly, well, not always randomly, but a risk basis, we pick 50 accounts, 55 accounts out of the thousands. Okay, so the idea that what we're talking about in terms of QC 1000, first and foremost, QC 1000 has to be implemented, okay? And most of the large accounting firms have been implementing aspects of this, if not exactly, for years. Now, that's number one. Number two, for us, we need to have to, as we call it internally so far, modernize our inspection process. This is our number one priority here. After getting QC 1000 out, we are in the process of forming a task force to reconsider the inspection process. And the inspection process, as was explained earlier, will continue to be risk-based. But the risk element of it is going to be much, much higher. And let me go back for a second. Once we go back and we do the QC 1000, let's say the quality control inspection of each one of these firms, right? By definition, we're going to assess the process they follow to do the risk assessment. That is a roadmap to figuring out what are the risky clients that they have identified. And based on our own input, our own experience from history, our own experience and expertise in industries, we're going to say, by the way, and this is where our add value comes in. Okay, this is the way you assess the risky clients isn't exactly right. We have another point of view. Let's talk about it, right? But ultimately, we want to not reduce the number of accounts that we look at. It's possible that we will look at more files. But if we do it on a risk basis, okay, and we do it top down, it will give us a chance to focus on the areas that could cause, the most important areas that could cause an audit failure or an airplane crash. So ultimately, we don't have to look at the entire file, but we need to look at the specific risks that are at the highest levels. And there, we need to have our highest expertise. We're talking about AI. Okay, we're talking about cyber. We need to have those people that address those specific risks. And of course, industry expertise. If we're looking at an oil and gas company, we have to go in with oil and gas experts to look at the specific risks. Most companies don't have 100% risks in everything. Now, what I'm going to share with you, I think is generally public knowledge, so I don't think I'm giving anything away. But my last client was the Coca-Cola company, okay? The Coca-Cola company is, as you know, a giant company, very profitable and everything else. If you were to look through the financial statements, and you're all experts in your area, I encourage you to do it. I think what you'll find is that the most risky area, and it's outlined and disclosed, is the income tax provision, because they have operations around the world. They produce most of this stuff for tax purposes in two areas, in Ireland and in Singapore primarily. And so for me as the audit partner, the most important thing that I needed to do is look at the tax provision, and I needed to make sure that I had the most expert, sophisticated tax partner in the world that would say to me, yes, they did it the right way. The rest of it, they have very sophisticated people. The EY have been the auditors for 100 years. We know what the history is. We know what the areas are. So if the PCAOB was to come in and review the Coca-Cola company and they review their inventory, it would make no sense. It would mean nothing. They have to come in and review the income tax provision, right? And the disclosures around the income tax exposures and which are there. So what am I going with this? I don't know what the exact answer is, but it doesn't, we need to re-challenge everything we do in light of 2, 3 factors. One of them is the accounting firms have poured millions, if not billions of dollars into their systems, right? I was in Paris last week for something called the International Forum of Independent Audit Regulators. And all the firms, the big firms came, the big 6 came in to talk to us. The way they operate now is each one of them has a platform where the auditor goes in and pushes buttons and is told exactly what to do in all the, let's call it compliance areas. They tell them, here's what you have to do. Go find this inventory, this receipt, whatever, blah, blah, blah. And they provide them information to look at the most important subjective areas. This is where the challenge comes in, right? Because in other words, if you look at an audit, 60, 70, 80, 90% of the work is compliance. We often say to the auditors to make them feel good, the CPAs, that, hey, you're doing a great job, you're learning all this stuff. Yeah, but the truth is most of it's compliance. Most of it now has been automated through AI and other means. So it's the rest 10, 20, 30% that's important that could cause an audit failure, that could cause an airplane crash. And our process needs to be modernized to focus on those areas. And I mentioned the Enron example. I challenge you to go back to all of the major audit failures. I think what you will find is that it was the firm, at the firm level, that the mistakes were made in terms of policies, not training people adequately, not giving them the right support, letting them do the things that they want to do. So, and keep in mind one more thing. It's interesting that the PCAOB, and this is no criticism of anybody, but the PCAOB put out standards, AS5, 15 years ago, whatever it was, telling the firms that they have to put in entity level controls. That entity level controls were critical, and the auditors have been auditing against that. But in terms of, we're now coming 15 years later, and we're saying now QC 1000 is, in other words, entity level controls at the firm levels are necessary. Of course they're necessary. They're important. They should be in place from the beginning. Selecting a partner, the right partner, like selecting the right pilot to fly a Pacific model airplane, okay, and training them and providing the right incentives and all the other things that go with it is critical. But many of the accounting firms over the years, including, by the way, back to Anderson, think about Anderson. It was what I explained to you. And what was the other big factor? The audit partners were not making as much money as the consulting partners.
Yeah.
Right? That didn't have anything to do with any accounting or not testing enough invoices. So I don't want to overdo this, but there's a reason we're moving down that path. I'm not suggesting that it's going to be perfect. It's going to take time, but we need to move in that path, and that would allow us to look at more accounts as well. It's just that we're not going to look at everything soup to nuts. And we need to train. Another big part of what we have to put in place is, like the pilots, we need to train and retain the best and brightest so that they can focus on the specific risks that each one of you have been talking about and each one of you have been emphasizing. Last thing I will say is there is a difference between the bigger firms, the top 6 firms that have invested millions on these platforms and AI, and the smaller accounting firms. It's a big issue that needs to be addressed. I'm not so sure that the PCAOB is the right place to do it. But the smaller firms have a tough time coming up with the investments necessary to get to become bigger. And as you all know, I'm sure you know that almost 90%, at least 85% or more of the value of the public companies in America are audited by the Big Four. Right? So when we talk about focus in the PCAOB has to focus on the 80%, which is the Big Four or the Big Six. And then we need to specialize people in our shop to make sure that they understand broker dealers, because that's part of our responsibility, that they understand what the dynamics of smaller firms and what their challenges are, one of which, as you know, is private equity. These smaller firms, GT, Grant Thornton, BDO, some of the others, because they need money, they're going out to private equity. Well, that creates all kinds of issues at the firm level, compensation, investment, priorities, and so on and so forth. That's an area that we need to be looking at. We, the PCAOB, can't prevent a firm from getting investment money from the private equity. But what we need to look at the system of quality control to make sure that the allocation of earnings and investment and so on and so forth is at the right level. Reviewing 100 files of Grant Thornton because they're getting private equity money and is not going to give us what we're looking for. So I said probably a little bit more than you wanted me to talk about right now, but what I'm trying to kind of sense is the main points that are coming out of this discussion and to connect those, because it's critical. As I said earlier in my speech at the beginning, it's critical that we connect it to what we're doing. And the major thrust of what we're going to be doing here in the next few months is redesigning, modernizing, whatever you want to call the inspection process.
Thank you, Jim. Jen?
Thank you very much. And thanks for having me on the group. Glad to be here. I think I wanted to sort of frame my comments from like ICGN's members are largely very, very big global asset owners and asset managers, right? Who are not all, but many of them essentially universal owners. So they're kind of invested in everything. And even if you're, and perhaps even more so, if you are a non-US asset owner, you will still have a huge proportion of your investments on behalf of your pension savers, it's mainly pension schemes around the world, right? Invested here in the US. So there are two things that are important in terms of audit quality, I think. One is the individual audit on an individual company that we own the shares in, but also the systemic piece, right? The investors have to be able to trust the whole market as being a market where we can trust the quality of the financial reporting. And so I think you have to keep those dual goals in mind as you move forward. And the PCAOB in particular, you rightly note the FRC. I think the Japanese FSA as well similarly have a kind of systemic piece that's very important. I think that you make a good argument about the airlines, actually, and I think, and we see this work well in other jurisdictions, there is a role for firm-wide controls-based review. I, however, do not think that should be at the expense of file reviews. It's like controls and tests of details, right? So I completely agree with you, though. If you're even in the samples that we were given here, like the Deloitte report, this is like 70 audits. That's a tiny number of what they're actually doing. So I think there's a lot of added value in the firm-wide, but I think you've got to, like, that should be extra, not instead of, would be my view.
That's the point I'm making.
I think we're in agreement on that,
Yeah.
but I just wanted to, that's the view. I think the other thing that strikes me that's interesting listening to colleagues is I read the inspection reports and I thought they didn't really say anything. And I think that's quite interesting, the difference between what an investor gets and what an audit committee chair gets. And that may well be appropriate, right? Because it's perfectly possible to have a terrible audit and the financial statements be okay. It's also possible to have a relatively good audit and there still be problems. And so we have to be mindful of not spooking the market. I do think that's fair. But actually, you know, these reports, particularly for the big firms, they don't really tell you anything that's particularly engageable as an investor. And so I think that's partly because these are all input measures and they don't link to outcomes. necessarily, and I understand that's quite hard. I'm not aware of anyone having cracked how to do audit quality indicators that do link to outcomes, so I'm not expecting you to magically solve that problem overnight, but I do think that's what we should be focusing on, which is what are the things that are more likely to result in an actual problem, i.e. the company isn't a going concern and we sign the audit, or the accounts are materially wrong. Because as Gary said, it's not that 20% of public company accounts get materially restated every year. So I do think there's something to be said for like, how do we think about it differently? But at its core, my main thing I wanted to say, and I think, we spent a lot of time last year writing letters, desperately trying to defend this organization existing, and I'm glad that it does, is that you mustn't, don't, in an attempt to do more and different, don't lose the trust base that currently exists. And that keeping the kind of confidence of the market and the quality high is really important.
If I can just respond a little bit, let me just make it crystal clear that the plan here, the hope is that if we go down the path of QC 1000 and looking at the risk at the firm level, that we actually look at more files, right? But that process needs to be done in a way that focuses on the areas. So take it what Christine was saying earlier to the nth degree. Yes, risk-based, but let's focus on the areas that are going to be problematic, okay? Let's address, this may be a better analogy, but let's address a sickness. Somebody has been diagnosed with cancer. Let's address the specific cancer and deal with that, right? And not deal with the whole patient, because it's not going to do much good, right? You need to focus. And ultimately, hopefully, that will give you much more comfort than what we do today. So it has to be at both levels. When you audit a company, right, based on the auditing standards, you look at the entity level controls, but you also look at the implementation of those controls. And in order to check the implementations, you have to go down to the area level. You need to test detailed transactions. You need to look at subjective areas. You can only do that at the filer level. So we're not by any means suggesting we're not going to do that. We're suggesting that we're going to do the top based on a standard now that's very robust, and internationally ISQM1, does something along those lines. Some would say at a good level, but we're going to go deeper. But we're looking for situations where potentially they can cause the crash. And what's important along those lines is we need to analyze, which we do to some extent today, every close call, every restatement, going back to the information that would be useful to all of you guys, right? The restatements tell a story. And we need to capture that information, bake it into our inspection process, right, for sure, but also go out to the world and say, hey, this is what's coming up. And this is what needs to be addressed, similar to the FAA coming across some defect in an airplane and having to say to everybody else, you need to shut down these planes or you need to fix it, right? So that's the thinking. What is most concerning for me, and I'll share this with you very openly. Last week in Paris, when we heard from the top 6 firms, one of the questions that I posed, the only question that I posed to all of them is, because I lived most of my career, I lived in the boardroom, as more specifically with audit committees. My job day in and day out was to prepare for the audit committee, right? And everything took place at the audit committee meetings, whether you were going to stay on as the auditor or be fired or whatever. And what I asked them specifically, I said, you attend, because these were the top 3 or 4 or 5 people from each one of the big 6 firms. I said to them, when you go meet with the audit committee, what do you take with you as it relates to the PCAOB? Goes back to a suggestion that was made earlier. What do you take from the PCAOB? What do you tell the audit committee about your interactions, your views on the PCAOB? Okay, and how can we improve that? What is it that I need to do to help you through the PCAOB in that process? And the answers ranged from, we tell them that we we worked together with the PCAOB. One of them inadvertently used the term manage the PCAOB. I'm serious. One of them and another at the other side said the PCAOB, the audit committees have tuned out the PCAOB. And why have they tuned it out? Because they're not getting this information in the first place. I love the requirement that we make it mandatory somehow that that they present information on the PCAOB every year.
I said that. Yeah.
You said that.
I said
Yeah, it's a great suggestion. I love it. And we need to find a way to do it, number one. Number two, we need to have, to other comments, we need to have relevant information for them to share at the audit committee meetings. And that goes also to the heart of, yes, we're going to look at the inspection process, okay? But then so what? We need to look at the communications. What comes out of it? What is most relevant, right? How do we make that useful as you deal with those situations?
Yeah, the point I was making about part two, and I don't disagree that you need firm-wide controls. I mean,
Right.
the partner, Arthur Anderson, knew there were firm-wide controls and he did it anyway.
Right.
Right?
Right.
So even if you tested them, you'd have to go look and see if he followed the procedures. But the fundamental challenge that investors have is that they can't see any of that testing.
Right.
And they can see nothing in this report with respect to what the firms have done,
right,
or what the PCAOB's done relative to the firms on those, because of what's written
right,
actually in the statute
right,
on firm level. So that's our concern, right? I actually went back and looked at a survey we did of investors in 2018 to see where the inspection report stood as how they assessed the value of the audit. And it was way below, maybe 10th or 11th, way below having information they want themselves to be able to assess the audit, which is, I think, what you heard, right? Because they're in such an information vacuum. What does that 20% mean? I don't know what that 20% means. I was an audit partner. I don't know what it means, right? I understand that it means relative to this number, but I don't know. That gets extrapolated by the media as a reflection onto the entirety of the process. And so that becomes a tagline for politicians, right? So if this is staying so high and we're spending this much on it, why should it exist, right? That doesn't work, right? And we're looking for things to actually defend and support the PCAOB because we know that its mission is important, and we want, certainly the PCAOB is an ex post. We like ex ante controls and insight, but we understand the importance of that process. So
no, Senator, you're making great points, obviously, and let me just quickly respond. Ultimately, there's no question that the statute limits us as to what we can say. The best we can think about, and that's in the context, is that we make recommendations on the quality control systems of the firms, and they have 1 year to remediate, and then we go back and test it. And if they haven't fixed it, obviously we can make the information public. That has some weight. The firms take that seriously, and they have worked on it. So there's limitations there. But ultimately, our value can only be validated through information that we can provide to you. Yes, it's important for you to understand the inspection process, to have comfort in that. Obviously, the whole world doesn't see it. It's only this group here and a few others. But there needs to be better information so that it's information that's valuable in a decision-making process for the audit committees and others that are involved in selecting auditors.
Yeah, there's nothing in the statute that prevents a report of a meta-analysis, not of a firm level.
Got it.
That allows you to say, these are the elements of QC 1000. This is an idea of what we tested, and here are some of the things we we found. There's nothing in the statute that prohibits that.
Well, that's what we have to think about.
Yeah.
I mean, at the end of the day, I want you all to know that we are focused on the inspection process to make sure that it's fit for purpose. We're focused on the quality of the information that comes out so that it's all useful to you.
Gina?
So first of all, thank you. You've answered so many of the things that have been floating through my mind. So I appreciate your comments. And I completely agree, by the way, with the notion that financial restatement is certainly a proxy for internal control. But one thing I want to kind of just to pile in to Steve's comment and something that I've said for a long time, we actually do have pieces of information at the PCAOB that have been academically studied, but have had to be sort of put together manually that you have. For example, on the Form AP, you have every entity and the audit partner that is assigned to that entity. Now, that looks like only two pieces of information, but you also know the industry that that entity is in. You know, you could theoretically search to understand how many engagements does that audit partner have in how many different areas of expertise, and how long has that audit partner had how long of a duration have they had a relationship. These are all pieces of data that immediately you have on your Form AP that are immediately useful and publishable today without having to go farther into the process, that actually could highlight sort of hotspots, if you will, worth looking at if we're trying to gain comfort in the financial statements that we're evaluating. So that's just really my only comment. It's a suggestion more than one that requires an answer.
Thank you, Gina. Alicia?
Thank you. Thank you so much. As a chartered accountant, I have to say that this concept of quality control and assessing that at the firm level resonates incredibly well. Because if you don't have that umbrella process at the very top, it's questionable as to what kind of reliance you have, because it comes down to a one-off of who's on the audit team, who's the partner, how did this work get done, on Tuesday versus on Friday. So clearly, and that actually follows the process around the gas standards around assessing the existence of internal controls, what that process is, testing that, which of course directly impacts the extent of substantive testing in terms of the audit itself. So there's a very nice parallel or analogy if I think back to my audit days. But I want to come to something a little bit different. When I think about some of the challenges that the PCAOB is having, I think at the heart of this is that the PCAOB has not communicated a lot of what they do, right? There are these prescriptive documents that are available on the website, all individually, all focused, but they're all from the PCAOB process perspective. I think a shift needs to happen such that it's from what do our users want? If we're trying to provide evidence or information about the integrity of our capital markets for investors, what do they want? How do we recast the data, actually? I'm sorry, I don't believe that the PCAOB is doing a very good job in converting that data into information. I continually refer to what the PCAOB puts out as data, right? That pivot needs to be, how do we convert that data into information that's relevant for this user community? I think that is a gap that, at least over the 3.5 years that I've had the privilege of being on this advisory group to facilitate. And then the second piece, I think, is the spotlights that the PCAOB has now been putting out on their website. I think you're on the cusp of something, personally. I think that could be expanded so much in much far greater detail using all of these data sets that you have internally that can demonstrate the relevance of this organization and help me as an audit chair, right? Because when I see a report that has firm X across the board, I would like to know the 20%, is it in a particular sector? If the company I'm chairing is in that sector, I am intrigued. Alternatively, I would suggest to you that a lot of these findings could be grouped in more meaningful ways. I don't know, pick line items on the financial statements. I think the better idea would be areas where there are estimates, right? Where there's more management consideration around these things. Now, all of a sudden, I can look at this and say, oh, firm X, their biggest shortcoming was in estimates. I look over my financials and go, okay, I think I need to talk to the partner on the engagement about estimates in this particular arena. right? So there's ways to come at it while this bun fight over issuer disclosure, yes, no, all the rest of it. I think there's a wealth of data that's out there that could actually be incredibly beneficial. Thank you.
Thank you, Alicia. Satyam, David, and then Nemeth.
Mr. Chairman, I want to emphasize something as you think about this risk-based approach to the modernization of inspections. And that's what Jeff said, which is the board's inspections of registered firms operating internationally, particularly those in mainland China and Hong Kong, I think goes directly to the heart of our mandate. All of us, I think I can speak for all of us here in saying that we really appreciated, I think, Christine's presentation and the staff's presentation last year on international inspections. I want to emphasize, though, 2 additional points on top of Jeff's. First, Congress granted the board a singular authority within the broader context of the federal government. As the staff informed us, the information obtained pursuant to the HFCAA, which quite remarkably was passed unanimously by Congress and signed by President Trump, is not otherwise accessible to any part of the US government. In other words, the PCAOB is our first and practically only line of defense on those matters. Second, the staff's access to all work papers of the firms was fundamental to international negotiations on the HFCAA and has since been reflected in Rule 6100. So going forward, as you think about the inspections program, I very much hope that the board remains steadfast in ensuring complete access to these firms' work papers is preserved and fully exercised by the staff. I think that's crucial, particularly in the international context, to ensuring that we are faithfully implementing the HFCAA.
I totally agree. We've talked about this extensively internally. I myself, just yesterday, I was talking, I don't know who I was talking to, I guess one of our inspection teams, Julie, about myself visiting China as they do an inspection coming up here in September, October. I myself spend 30 out of my 40 years with EY. My clients had operations in China. I'm very much aware of how what the challenges were, what the challenges are. And this is, of course, it's going to be a major focus. This is true for all international organizations or international countries where we have challenges and things to think about as it relates to inspections. We spent most of last week in Paris talking as regulators of how we can work together to get access to information and so on and so forth. So yes, it is at the top of the list for sure. Thank you.
David, and then Nemeth and Jeff.
Yeah, thank you. And it's a pleasure to be here. I'm one of the new members, and I've already learned a lot from my fellow group members. One thing that has been going through my head as I've listened to this conversation is the credibility of the PCAOB to the various stakeholders really relates strongly, I think, to the quality of the people at the PCAOB who are conducting the inspections, and both the sort of firm level and the inspections of the processes within the accounting firms themselves, and then of individual audits. And I think that there's a perception, perhaps, that we're a government agency, and some of the inspections are essentially compliance inspections. You have a set of standards, you have somebody coming in to make sure that we're meeting the standard, check the box, move on. And that doesn't necessarily give some people comfort that there's judgment involved in terms of quality and looking around corners and really trying to understand what is going on around here. And so we really, that I'm not trying to impugn anybody who works at the PCAOB, by the way, but I do think the quality of the inspection team is critical to the credibility of what the PCAOB does and puts out. And I would also want to and we'll probably talk about this in a couple hours, but the way audits are done by the firms is going to change dramatically, I believe, with AI. And so I would just encourage us to think about, as we Mr. Chairman, as you make changes to the PCAOB and how it's staffed and organized and how it goes about its business, that we think about what the future looks like, because it's going to be, I think, dramatically different than what it has looked like.
Yeah. David, I could not agree more. I listened to the firms there last week in Paris, and they spend most of their time talking about the platforms that have established and the use of AI. It's not next year. It's not the year after. It's here. And the reality of the situation is we internally have not focused, or let's say have not invested sufficiently in technology and training. And when I came in and I was shown the budget, actually, as I was interviewing, and I was asked to react to the budget of the PCAOB, and those are two first things that I talked about. And I'm working on making sure that we get the right investments for technology and for training. I think we have great people in our inspection process. I haven't met all of them, but I think we have great people. But I think it's also fair to say in the context of modernization that they need to be trained in the things that we want to do, the focus on QC 1000, for example, technology. And what's interesting is when I came in, one of the first things I did, I asked, we sent out a survey to all of our people, 800 plus people, and we said, can you respond to me as the chairman and tell me the 3 things that you would change if you were in my seat going forward? And we got really good responses, and we had something like 350 responses out of the 800 so. And I would say that the primary thing that was highlighted was technology and training, right? So yeah, it's got to go hand in glove. You know, if we're going to modernize it, we got to modernize and help our people be able to execute this, because, and not to jump around, but the ultimate credibility, and again, if we think about some of the other analogies and all, comes down to whether or not these firms that we are regulating take our comments and recommendations seriously. That's really, because that's where behavior changes. That's what we're trying to do. That's what we're all about. We're not going to go out, we're not going to become the government auditors and replace them. So we need them. If you think about them, this may be totally inappropriate. If you think about them, we're ultimately responsible for the audits of public companies. But if you think about them as subcontractors, okay, what would you do with subcontractors? You would make sure that they follow the quality, the level of quality that's acceptable to you. So that we have to do that. And what gets every time, and you guys have all talked about it already, is this idea that 30%, as we presented in Paris, the survey, that 35% of the firms that were inspected, the issuers that were inspected, had deficiencies. And people are puzzled. And going back to the analogy, they're saying, okay, you mean the 35% of the airplanes are going to fail, are going to crash? You know, let's shut down everything. Let's shut down the auditing profession tomorrow. And we need to find a way to communicate our findings. I'm not suggesting that in any way that the deficiencies are not appropriate. They may be very appropriate, but what do they really mean? And how do they change behavior? How do they change the system of quality control? What are the main issues? To your point, certainly on additional information. The FAA, I'm sure, I haven't checked it, but I'm sure looks at every close call and analyzes them specifically and shares that information with the airlines. That's a basic thing that we ought to be doing. We ought to be looking at all restatements and coming up every year with a list of the restatements by account, right? By firm. And then go deeper and say, okay, who were the partners that had most restatements? Most of you may not know, but the accounting firms are totally focused on this. If you get a restatement on one of your clients, a material restatement, because there's minor restatements too, a material restatement, okay, constitutes the same as a deficiency from the PCAOB, which requires them now, they all have this, a reduction in your distribution. And it could be significant. And some of them, I hate to say it this way, but some firms will use that information to weed out partners. And it's probably not a bad thing. You heard last week about a 10, 12% reduction in partners at KPMG. I guarantee you, part of their assessment was how they do on quality and how they do on PCAOB findings, and do they have any restatements? So it does make a difference, but you have to have the information to act on it.
Thank you, Jim. Nemeth and Diana.
Just connecting just commenting on a few points that have been said before. I think Ken and David said this. Audit firms will often try to minimize what the PCAOB finds in their inspection reports by saying it's compliance and paperwork related. But what else would they say, right, when there is an issue? From the PCAOB's perspective, the thing is what inspectors do not know is whether a process or certain procedure was done or not done. And if it was done, perhaps they didn't do the paperwork, right? But you can't tell whether the procedure was done and the paperwork was not there, or it was simply not done. And so it is, I understand from our standpoint, from the investor standpoint, it's sort of hard to distinguish between these, but I would not necessarily minimize the lack of paperwork, because it could be that the procedure was not done. The other part, and I think Gary mentioned this, is just the high deficiency rates. So this is something I've looked into. Part of the reason why the deficiency rates seem high to me is because the focus areas keep changing. The engagements that are selected for inspection, they change. The personnel that perform those engagements, they change, right? So I think part of it is that. So again, the interpretation of that is sort of nuanced, and it's hard for outsiders to interpret what these deficiencies mean because of insufficient information. But the thing is, I do appreciate why the deficiency rates continue to be high, because focus areas just keep changing as companies change, as the economics changes. And the last part is, I'd say that the incentive structures have changed. So from our standpoint, the thing is, like as Steve said, and Gina's been saying, Sandy Peters has been saying this for years, is that we would like more information about QC metrics. But that is not to take away from how the incentive structure of audit firms has changed. Partner compensation is now tied more to quality. I appreciate what the PCAOB is doing behind the scenes as well, even if all the information cannot come out.
Thank you, Nemeth. Diana, Steve, and then Ken again.
Thank you. I wanted to start by commending the focus on trust in the capital markets, giving investors the information they need. The stakeholder engagement is excellent. It's great that this is the first priority, and that you are welcoming candid feedback. That's excellent. And I wanted to start there. I will now just comment. My perspectives are from someone who works with an investment management firm serving clients, pension fund clients in the US, Canada, and around the world. And I'm also on my first audit committee with a publicly traded company based in Houston, in Texas. I think the focus, I think, is, I want to also thank you for noting that the elephant in the room was that there's a lot of investor concern out there that the PCAOB was going to go away, and that now that it's here, it's actually going to roll over and not be helpful in building trust in the capital markets and giving investors all they need. So my theme here is communication, but communicate that is very important. That is very encouraging. Another area of communication really is, we're talking about risk. What does people don't know what the PCAOB does. They don't know what the QC is. They don't know what an inspection is. What investors are interested in is forward-looking indicators of forward-looking risk. Not interested in the past, except as it helps me mitigate or understand a forward-looking risk. And so my suggestion would be to lay out this risk thinking process, because it is brilliant and the people here are brilliant. But just from our perspective, in terms of the investor perspective, what I hope you'll lay out in terms of some of the areas that we're thinking of is, yes, this AI, and in the audit, in the issuer level, internal controls, the whole thing, the human capital issues at the audit firms. We as on the investor side worry about that a lot. How are you going to develop the people to have the skills to think through these complex and challenging issues, which is where the risks really are? If you can't hire them, if you can't develop them, if nobody wants to come into the profession, et cetera. Yes, the cyber and China issues, but the cyber issues, the audits, financials is the back door to lots of, there's some financial technology players, not to name names, that have had challenges, right? We're all worried about that. I'm worried about that. The industry experts, the CAMs, yes, the PE and smaller firms, private markets, all of that. Yes, but lay out how you think about risk. And then to the point about the issuer, yes, we are I want to be able to pull up a company and know, okay, I'm reading these CAMs. What did the PCAOB think about that? What did the auditor think about that? And we do have access to the international information on those same CAMs. So we're trying to understand why did it come out this way in this jurisdiction, that way in that? What's the right answer? Yes, all of those areas where you need context and some conveyance of all of the thinking that's gone through, and then the putting it into some sense on, does this matter? Because most of the reports are just you spend a lot of time looking at, this is very noisy, and we just want to get to the bullet pointed point of view. Thank you all. It's great to be, it's an honor and a privilege.
Thank you, Diana. Steve, Jeff, and Ken.
I guess just to follow up on some of Diana's comments, I think that going forward, one good idea would be to measure the success of the organization and the transformation that you're contemplating in terms of the actual utilization of the information. It's, a lot of this is Esperanto to the investment community, and looking through to how often they actually use it. You make it accessible and you track very actively how that information is being accessed and utilized, making clear, for example, and we've discussed, and I don't know how you would work it in terms of the internal standards, but which issues that investors might come across pertain to compliance with the process versus more substantive material issues or risks, making that impossible to not understand for investors, even retail investors. The issues with restatements, that should be a link in all of this when you're doing your research. For those of us who actively manage money, I don't think there's any doubt that those active investors who engage on the short side would be focused on those restatements if that information was available, and their focus would raise the profile of that information. And by the way, there's another side to this. For all the firms that are doing a good job, they sort of get a gold star in their folder by default. There are a lot of positives here, I think, for the audit community.
Thank you, Steve, Jeff, and then Ken.
Thank you. Chairman, I'm not going to second guess your analysis of how inspections should change. You have far more experience and knowledge on this topic than I ever will, and I've never second guess it. But let me just leave you with one thought, and it has to do with information. So I represent institutional investors, and some, not all, institutional investors, they have proxy voting guidelines, and some of them have guidelines with respect to the election and re-election of the audit committee chair and the audit committee members. And then many companies have a proxy vote on auditor ratification. So those are three votes that institutional investors take that there's not a lot of information out there to help them make a knowledgeable vote on those three things. So however you change this inspection process, I would just ask you to think about, can we get to a place that there is timely, useful information disclosed to the public? So the aggregators and others could take that information, and our institutional investors, if they want, to take a look at that information and decide whether or not they should give consideration to it when they vote on election or reelection of the chair of the audit committee, the members, or the ratification vote. And I'll give you one example. So one of the largest asset managers, which is CII member, they have a voting guideline that says we may vote against the audit committee members where the board has not facilitated quality independent auditing. So to the extent we get to a place where your inspections provide public information that this institutional investor might be able to use that may be material to whether it's a quality or independent audit, that would be extremely helpful to institutional investors. And I'm not saying all of them have these policies, but many do. And they're looking for high quality information to help them make knowledgeable votes in those three areas.
Probably most.
Thank you, Jeff, and thank you, Jen. Ken, and then David.
Yeah, a couple comments. First of all, congratulations, Jim, on your 40 years. You've aged well. We may age you a lot more pretty soon, but I always like analogies, and so I'm going to talk about a little bit of your analogy on planes just quickly, because I've flown a lot. There was actually an accident here in DC recently. My point of view is actually quite different than what you took. I think a lot of aircraft issues come back to the pilots and pilot error, and a lot of it's due to weather, and a lot of it's due to perceived or direct pressure from the occupants. And the reason I say that is, I think in my reading of Enron, we had a partner there who was kowtowing too much in conflicts with the firm. He had conflicts, as I recall, with the country clubs and a whole bunch of stuff, which I don't, at least you're closer to it than I am, but my sense that was not so much Anderson, but it was, and I think it comes back. The reason I'm bringing all this up is when I read the inspection reports, as I said earlier, and I look at a lot of what I would call bad apples, and I don't know what causes it, but I think there's some folks. And I remember I was auditing NXP some while ago. I'm not auditing, I was on the audit committee, and there was a serious issue with KPMG in Netherlands. They had to fire a whole bunch of people because they had a conflict, and we actually brought on EY in that case. So anyway, I just, and by the way, I also thought Andy Fastow and Enron really did a disservice to all of us CFOs. So that was a comment. The other comment I want to, so anyway, I think of the individuals as much, if not more, than the firm. The other comment I want to make, and this is a general one, in the inspections, I meant to say this earlier. What worries me on inspections is it casts a pall on many firms, and I think it hurts the reputation of the audit profession. And we, as I recall from prior meeting we had here, we're seeing less folks going into the auditing profession. And I do think this organization needs to worry about that. Think about what we need to do to make the accounting profession back to its rightful place as being a great, noble profession. And what do we need to do? And the inspections, I think sometimes and I had this comment earlier, so people that know heard this from me earlier. I think we cast a negative reputation on so much of the industry, and it sort of, I think, causes people maybe not to enter the profession because, hey, why do I need to go through all this, crap, so to speak, for what? So anyway, I think on the inspections, just to think about how they come across, that we don't want to disincent people to come into the industry. That's my overall point.
Yeah, if you don't mind. So I'm going to respond to this. You have to believe me, this is close to my heart. Okay. I didn't take this job. You all know, you talked about this, for the money. Thank God I didn't need that. I took the job in part because early on, several years ago, my son was in the accounting profession. He was with, at my urging, he was with one of the big four firms. His particular account, a global company, was audited. He was a senior at the time, and was inspected. And it didn't go well. And his manager, this was kind of early on in the process, right? So his manager, senior manager, resigned. from the accounting firm. And he came home one day and he said, Dad, I'm going to disappoint you. I'm not going to follow your footsteps. And this is a different environment. It's different than what you grew up in. I hear from everyone that they're disappointed that this is now regulated. Exactly your point. And I have to admit that at that time, I did not push back. And I urged him to go find another job, which he did. He's now CFO of a division of one of the public companies. He's doing fine. It's been stuck with me for all these years. He's now 42 years old. He would have been a great, great partner. He's a great kid. Number one. Number two, we've been blessed with 10 grandchildren, my wife and I, and the oldest is 14. And we're beginning to have discussions about what she should do. She's a really good student and all. And I thought to myself, of course, the public accounting profession should be where it was at one time, and I have a responsibility to do something about it. On top of that, as some of you may have heard, I'm an immigrant. I came over when I was 13 years old. I was able to enjoy with my family the American dream. And just like I did after retirement, serving 1 year at HUD, I always felt compelled to do public service. So the reason I'm here is because of the public service and to make sure that the profession goes back to where it belongs. And I want to do my part in that, and through, of course, the PCAOB. That would be my legacy. There's nothing else here for me. I'm not looking for a political office. When I'm done here, hopefully I'll do a good job and I can go back and play golf. So what I've told my team, actually over the last few days, now I haven't had a chance to talk to my board members. We get together every Monday morning. We didn't get a chance there because I was traveling. Our job as the board members and everyone else involved here, the 800 people, in part, needs to be to get out to all the major accounting programs across the country and talk to the professors and talk to the students and recruit them to come into public accounting. Public accounting is nothing more, as you all know, attracting, retaining, training the best and brightest with sufficient technology, right? And a robust assessment process, because not everyone is going to make it, right? That's all this is. And we at the PCAOB, we are, in my mind anyway, a very, based on, with Congress, the mandate we have, a very specialized professional services firm. And our main focus is the accounting firms, right? But the characteristics are the same. We need to, and others made the comments earlier, we need to attract, retain, and train and incentivize the best and brightest. And along those lines, I will share one more thing. In my mind, my vision, there are partners, there are people in public accounting profession that come from great programs. They do quite well. But there comes a point where they have to make a decision, let's say generally at the manager or senior manager level, whether or not they will stay in the profession. And one of the ways they make that decision is based on the expectations of the firm, what they've learned over the 6 or 7, 8, 10 years, whatever they have. And those expectations, as you know, are for most of the firms is you have to have a solid technical base, and then you move down a technical path where you become professional program director or whatever you call it, or you become more of a generalist, and you're expected to go out and bring in new work and work on proposals and things. There are people in the profession that don't want that aspect of the business. They don't see themselves as partners in the firm doing all that stuff, but they love auditing, they love accounting, they're very strong technically, right? So the only thing that you might say they don't want, I don't want to say missing, is the sales aspect. Those are the best people that we need to have at the PCAOB, because we don't need our people to go out and sell. We need our people to go out and train and do the right things. And ultimately, and this is where the value comes in of this organization, ultimately, these people, right, our inspectors need to sit across the desk from a sophisticated Big 4, Big 6 partner, right, who has all the training, specialized skills, blah, 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 right? And they need to go toe-to-toe with that partner to conclude that there is a legitimate deficiency, and that deficiency needs to be addressed, right? And ultimately, the firm needs to fix those things so they can improve. Those are the people we need here. I already called it an elite. I want to have in this organization an elite group of auditors. We need to be, we're overseeing, we're regulating the accounting profession, the top people in the public firms. We need to have the people that match them at least, and hopefully, when it comes to technical understanding the standards, the auditing standards, the accounting, and so on and so forth, they need to be a notch above, but at least equal. So Ken, thank you for that question. It's a critical element of going forward here with the accounting profession. And don't forget that the accounting profession is not, and the other reason you might say I accepted to do this is because the accounting profession in the next 3 to 5 years is going to go through major challenges between AI, obviously cybersecurity, private equity, we talked about that. Securing, attracting, retaining the best and brightest is not that easy, because most of these accounting firms now, the auditing piece of the accounting firm is 1/3, 1/4 of the overall enterprise, right? That brings up all kinds of challenges. We haven't talked about that at all. So thank you with that.
Thank you, Jim. Great. Wow, that was inspirational with 2 daughters in college. I'm going to go replay that for them this afternoon. I'll do my best, Jim. Thanks for that. And with that, I'm going to turn it over to Jeff Mahoney, the General Counsel for the Council of Institutional Investors and an esteemed member of the IAG, to talk about CAMs. Thanks, Jeff.
So I'll speed it up. Thanks very much. Last December and in December 2024, the members of the Investor Advisory Group issued annual reports that are posted to the PCAOB's website that discuss the 3 most decision-useful critical audit matters contained in the 2024 and 2023 audit reports, respectively. These were audit matters that were nominated by the public and then reviewed by the IAG and voted on, and the 3 with the highest votes were discussed in detail in these reports that we issued in December of the last 2 years. So those reports were the culmination of an IAG project that we first initiated in April 2024 at an IAG meeting. So the objective of this annual project is to encourage public company auditors to voluntarily improve the quality of the disclosures of critical audit matters so they're more consistent with the intent of the PCAOB standard. That's AS 3101, the auditor's report on the audit of financial statements when the auditor expresses an unqualified opinion. That's the standard that sets forth the requirements for critical audit matters. So today at this meeting, we are announcing that for the 3rd consecutive year, the members of the IAG are again seeking nominations from the general public. When I say general public, I mean anyone, including audit committee chairs and members, auditors, financial analysts, investors, academics, anyone else who wants to submit a nomination. If you find a critical audit matter or a key audit matter that you believe provides decision useful information, please send it to us. The other qualification is that the company has to have filed a Form 10K or a Form 20F with the SEC. Now, when you submit your nomination, it may be submitted anonymously. One of our 3 winners last year was submitted anonymously. For each matter that you nominate, I ask that in 500 words or less, you provide an explanation as to why you believe this audit matter provides decision useful information to investors. 500 words or less. You don't have to write a book. All submissions should be sent via email to me. My email address is Jeff, Jeff, @cii.org. The deadline is June 30th of this year. All eligible nominations received will be reviewed by the IAG and evaluated, and then we'll take a vote on the 3 that we think are most decision useful. Those receiving the highest, the 3 highest vote totals They will be identified and discussed at a IHE meeting later this year, hopefully. And then we'll have more detail around those nominations, as well as some suggestions about how they might be further improved or how camps might be further improved in general in a final report that, again, we'll expect to issue before the end of this year. It'll be posted up on the PCAOB website with our two prior annual reports. So I would respectfully request that anyone who's attending today's meeting, whether it's in person or virtually, please consider nominating at least one key or critical audit matter from the 2025 reports by the June 30th deadline. And if you have any questions regarding this project, please feel free to email me. Again, my email address is Jeff, Jeff, @cii.org. Or you can even give me a call if you want. Happy to talk to you. 202-360-9919. That's 202-360-9919. With that, thank you for your time and attention. I look forward to reviewing, receiving, voting on the audit matter nominations from the 2025 audit reports. Thank you for your time.
Thank you, Jeff.
Can I ask a question?
Yeah.
Jeff, I have a question. I've been asking this of my team and I'm trying to figure this thing out. Maybe you've seen it already. Is there a database? Is there a list of all audit committee chairs of public companies in the United States? Because something like this would be ideal if there was such a database. They'd send out a request to them and say, please respond. And for us, going back to some of the suggestions that were made earlier, for us to have the database so that we can send out information, perhaps quarterly newsletters or whatever, to tell the world what the PCAOB is all about. Does anyone know? Has anyone come across any database of all audit committee chairs? I'm sorry?
There are data providers that collect these data and
Okay.
they're available.
All right, we'll talk at
I strongly suspect ChatGPT or Claude could come pretty darn close in about the next 10 minutes, but you would be lacking email addresses.
Yeah.
That's the issue.
The names are all going
There-
to be in the EDGAR file.
Yeah.
Like, the names are all public.
Yeah.
But it's the contact details.
Yeah.
But the Association of Directors would know their contact details.
National Association of Corporate Directors, that's what I was going to say.
Yeah.
Also, the business schools, Harvard Business School certainly runs an audit governance program. So the business schools all have generally an audit governance kind of training executive program as well.
I think we're going to have a press release tomorrow. So if anyone wants to send me any database of emails that I can send the press release to, again, it's jeff@cii.org and I will send it.
Thank you, Jeff. We're going to break for lunch and we'll promptly return at 12:40. Our session on AI, lunch would be served in the room next door. Thank you.